The opening range trade is not a profitable strategy on its own. The skill in the opening range trade is the same skill you guys are trying to develop as to time trades and to analyze order flow, right? I've tested it for a long time, a lot of back testing. And I'll tell you this, on its own, it's break even. So it's not profitable, but it's break even. There's very few strategies out of the box are break even. This is why a lot of people take the strategy, customize it. So here's how I've found the customizations work to make it 60, 70%. And it's actually extremely profitable. The most important thing is where the range is. If the open range is right inside of a huge consolidation, those days are better to skip because that open range does end up working, but it takes 3 to 4 stops. And oftentimes the resulting move after those 3 or 4 stops of the head fakes, taking every break, leaves you with neutral to negative results. That's where that whole strategy falls apart, is on the range days, right? So it has to be an open range where you're looking for a trade there anyways. Does that make sense? If the open range is dead smack in the middle, it's not as tradable. And then from there, to really make it a profitable strategy, what you want to do is skip the initial break or do it small size and make your addition on the retest. So let me show you on the chart here. This is the secret sauce to it. That initial break, okay, open range, break. If you're short here, you got a chance for a runaway day. Those are about 15% of the days. So if you have 10 sessions, 1.5. If you have 20 sessions, 3 of them will be good. So in that case, that's why it's not profitable. That initial break is how most people trade it. The most important part of the strategy is to add initial. So like, let's say you've allocated 4 lots per trade on this. Grab 1 on the breakout for these 15% of days. But understand that most times it'll chop and return back in the range, only to come down for the move, slight retest, down it goes. This is where the money is at in this range, right? So what I would say is get 1/3 to half of the position on the initial break, and then on the retest, that's where you load it up with the lowest risk and highest probability on that strategy. I mean, look at even today. Look what today did, right? You have the open range, and then you sell it, and you're like, yes, I am the master of open range trading. And it goes right back to the open. See what I mean? But then the second break and retest is bam. That's money. Money, money, money right there. Even today, case in point, you have 35 points off that trade. Right? And that's really, like, I've looked at dozens of parameters, and that's what it falls down to is, number 1, don't trade it in a range, in a nasty, like, tight range. Number 2, get the initial break smaller size, add to it on the follow through. And the last thing is use order flow to stay in the trade to maximize the move. Because once it gets in, I've tried 50 different ways to maximize profit. 30% extension off the range with Fibonacci levels off the range with standard deviation off the range with. I have an Excel file that's almost 75 megabytes. If you know what that is, that's a lot for an Excel file. None of it works. It doesn't work. There's no auto extension because then the market wouldn't exist, right? What you want to do is allow the trade to break and then use order flow to keep it running while you have a chance. And then start locking profit on the balance of your position at prior highs because it will retest the prior high, but oftentimes won't break it. So in this case, for the running of the trade, you break the open range, it goes. Okay, now you're down here, put your stop here. Okay, now we're down here, put your stop here for the balance. Now that we're down here, we're putting in these highs, start tightening this thing anyways, because 35 points is about the maximum you're going to get off the open range trade. It varies from around 10 to 25 points would be the initial trend, and then it tends to reverse on most days. There are days where you have a runaway of 100 points, but I've removed days that were 60, 70 points and up because those days don't happen often. You don't want that part of your data set. Right? So that's how you have profitable. Just to recap it, skip it on nasty consolidation days, grab the initial on small, and then add the bulk of your trade on the retest and resulting move and trail stops on prior lows of this open range. and it's a beauty trade. Typically, where it starts to falter out and reverse is 2 times the open range. Typically, very, very loose. So here today, 36 to 45, 10 points. So subtract 20, 10 times 2, 2 times the range is 20 points. The 06. See that? The move is terminated. You can consider that done. And that's it. It's that simple. It's just, it took me a lot of data, trial and tribulation to make it that simple. Any questions? Gary, yeah, 30-second open range works best. Tried a minute, tried 5. 30 seconds quick enough and early. And then the cool thing about the 30-second open range is by the time that trade is done, you've gotten paid to know the sentiment, and then now you're onto your trading plan and you have information and likely a profit. It helps you get started on the day with a more systemized approach rather than looking to hunt, right? It's kind of like every morning, you know a deer is going to be right in front of your campsite. You're going to have a shot. And that's a great way to start. You know, you're not going to go hungry, right? So that's why I even started this. I'm like, I want one thing that's automated, that's early, that I don't have to think about. I put one under my belt. From there, I'm warmed up. I'm going to crush it. Kevin asked a good question. So as a beginner working on pullback trades, should I use the opening range as an entry for a pullback? Only if it's at the pullback level, Kevin. Like, allow the open range trade to sync up with your levels, not the other way around. Don't suddenly start selling rallies just because that's where the open range was, right? Like, it's because then you're at danger of screwing both strategies up pretty big. So just like, I know it's hard at the beginning when you're hearing all this cool information to not apply it all, but trust me, like, nail down the pullbacks. And then guess what? You could add the opening range trade really easily to your repertoire because it is just a pullback. Honestly, that's all it is, right? But it takes skill because it's a very emotion-fueled pullback and it moves fast. That's kind of the chop of the day that moves the fastest. Like the slice of price action that's going to develop the fastest is that on most days. So go with the pullbacks, watch it, observe it, sandbox it, sim trade it if you want, but don't apply that to live while you're still learning pullbacks. You know, it's too much danger of screwing up your whole day, right? You have to focus on just getting those pullbacks done first. How wide should your stop generally be? So the stop that I use is the difference between the open range low or high. Okay, half the range is a stop that I use on this open range trade. So if today it's 41 to 46, okay, it's 5 points, 2.5 point stop. Alvaro. So half the range is my stop, which is actually a key thing that I forgot to mention there. So we'll have to add this part of the chop as well. Is when you're doing the stop, you could do an arbitrary points amount, which is great if that's what you want to risk, but you don't need to risk that much sometimes. Other times you have to risk more than you're planning to. So half of the range is ideally the amount of stop you should be using. Now, some open ranges will be like 15 points. It does happen. And I've defined as my parameters in order for an open range to be valid, it can't be more than 15 points wide. A tradable open range is still a valid open range, but is it tradable? So to me, 15 points was kind of right at where it'd have to be because then I'd have to be taking a 7.5 point stop. Right? Now, if you go on the retest, that's for the initial break. On the retest, you don't have to have that wide of a stop. Right, you go quarter of the range. Should be enough to protect you. Because that point's go time. No, Gary, I don't trade on the 20-tick chart. It's better on the 10-tick. It's better on the time frame that corresponds to how the day's moving, right? Let me load up this template. So here's an open trade template, open range trade. So for today, and it highlights the short opportunities for you based on the parameters of define. Now, this goes in more depth. If you want to see what the parameters are, you just go to chart studies. And each one of these is used in calculating and plotting the open range, right? So I have overlays for overnight levels. I have definition of what is a valid range. And I have signal studies that just color it red or green. That's all they do. Then have it bracketed out for a certain amount of time up till 10 a.m. Then it stops calculating. And then I have, like I told you, extensions 1.5 and 3 seem to be pretty decent. So there it is. There's a signal for the first one. That's your initial. Signal for the second. Down we go. The ultimate extension was 3 times the range, which was at 25. This one worked out pretty well. Yesterday's session, was there a buy? There was only one buy on yesterday. That was a break. Here's the 2 shorts. You can see if you leave it as half, you're generally good. And then look, it reacts to the 1.5 extension and 3. See these reversal candles? That's why I plotted them. So I'll make this template available to you guys can play around with it. I posted on the Software Futures channel the opening range strategy with the book. And you guys could have at it. I put a little notes too. So if you go Software Futures, it should be pinned at the top. And the way I explained it, you implement that, it's 65 to 70% win rate. And you guys have been trading it live every morning, so you can see it works, right?
So how many shots would you give it before you give up on it, Georgie?
I would give it 1 shot. This is a thing that works once, right? It's like, this is why it's important to eliminate that initial noise, right? So we said the first one, the break, you're not actually valuing as much as the follow through. The second time it breaks, that's when you actually hit it. So that's a 1-shot thing. If it goes back up and comes back down, it doesn't change that it failed at that level the first time. Now you're expecting new information at the same place. And it's not, this is kind of like a 1-shot thing. You do 1 trade on it, multiple legs, right? But you do it once. And if you're new, try it 2-3 times max, but reduce your size to as little as possible until you time it, because the execution of it's a little different than we're used to. Sometimes you're taking a trade without 100% confidence in it because it's systematic.